Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Tuesday, November 2nd. It is 7 o'clock straight up as I'm starting the video. Taking a quick look at futures, it's pretty much flat. And it's also a quiet day on the macro front as the FOMC starts its two-day meeting that will culminate tomorrow, the 3rd, at 2 o'clock with a statement by the FOMC. And then, of course, the important presser with Jay Powell that starts at 2:30 tomorrow. And along that vein, you know, there's always event risk when you've got the FOMC and, you know, we're coming into basically where everybody is expecting a policy change going from, you know, outright asset purchases, QE, to something different. What that different is what Jay Powell is going to reveal tomorrow. So everybody and their brother is expecting taper, you know, an announcement that taper is going to begin. But when does it begin? How fast are they going to taper the asset purchases? For instance, if they feel like, oh my God, this inflation is getting out of control, so instead of $15 billion a month, which is probably consensus, do they throw the market a curveball and say, no, we're going to go 25 a month so we can wind out faster, which would then, of course, imply an earlier interest rate rise after the QE is done being wound down. So that's the event risk. That's what everyone may be worried about. And then, of course, that rolls into interest rates and all that kind of stuff. So that's what we'll all be looking for tomorrow. Now, as far as the broader market goes, today and leading up to the 2 p.m. release and then Jay Powell, what does the market do in the meantime? Does it go into suspended animation and just kind of run out the clock until that happens, or do we proceed with more open market kind of activity? So that's what we're going to have to figure out today. Also, I want to share with you, and these facts are going to be on the blog post that I'm going to do this morning, but it has to do with buybacks. And we talked about that we're on the downhill path in terms of earnings. But right now, 65% of companies have an open window between now and the end of the year to do buybacks. All right. And there's 42 days left between now and the end of the year, trading days. Okay. So 65% of the companies have an open window, and there's 42 days left in the trading year, and there are roughly 160 billion of authorized buybacks to happen between now and the end of the year. And Goldman's done the math. You can divide 160 by 42, and you basically get 4, right? 160 divided by 4. So roughly speaking, there's going to be 4 billion being bought every day. So that's going to be more or less a constant bid under the market. And yes, you can have fluctuations, of course. Nobody knows exactly when their schedule is going to be, but the thought is that's going to be a very stabilizing influence on the market when you've got that constant bid of 4 billion coming in day after day after day. And then we've got the bullish seasonalities that go along with that. So there's a lot of tailwinds for the market to go higher. But there's always a canary in the coal mine, and that could be something Jay Powell says tomorrow. So my default position is stay bullish until the charts tell us otherwise. I would be looking for long ideas. Of course, there's always a short idea out there. I've got a number of them I'm watching. But I think structurally in your portfolio, I think the way to be is position bullish. Okay to have, a short or two as a counterbalance if you find a good setup. But that be ready to take advantage of any year-end move should it occur. So that's my basic stance. And of course, I'll be sharing with you, if we see something, we're obviously going to react to that and not just say, well, it's supposed to be bullish. If we see bearish developments, we'll get bearish. But there are a lot of fundamental backdrops to the market right now that have me leaning bullish. So let's quickly go through the charts this morning. SPY 2 hour, we got a little lift yesterday. I think you've got a good support level at 458, but we've got also yesterday's high at 460 being a pivot as well. So we're right here at 460. I think if you get a breakout, all-time highs you got to buy. So if we move above 460, you can buy that with a stop just below and do your normal active trading routine. If there's a pullback, I think 458 would offer you a nice entry as well because you've got all this support here underneath. So if we open weak and come back into 458, I would be a buyer there. And here's just the same information with some tighter resolution. You can see that we've got a little shelf there at 160, and then we've got a decent amount of support back at 458. So that's looking pretty good. Moving on to the Qs. Up a little bit yesterday. There were a number of FATMAAN names that didn't do so well yesterday, and I think that kind of held it back. But bigger picture, we're operating in the upper half of this rising channel, and as long as it stays in there, the bulls are definitely in control. So if you had held your position overnight, I think you can stay long against this like 386.25-ish kind of area right here. If you are out and you got to pull back into 384, that's going to be the midpoint of your channel, and I think that would be a good location to try and step in if there was a little weakness on the open or at any point during the day. Notice strong momentum profile and strong RSI profile. There's nothing there that would give us any kind of major pause or anything in the indicators that will lead us to believe that there's an imminent problem developing. So from that standpoint, I think the indicators are supportive of a move higher. So I think there's room to get up into the 389 area before we bump our head on the top of the channel, and would probably, then favor some kind of reaction and consolidation there. And so here's just the resolution on the 30-minute chart. You can see that that 386.50-ish area is going to be your pivot on active trading, and then you've got the levels below that you can use for a reference on any pullback. this is something that that I've been focusing on for quite a while, and that's the small cap space. We have been this is the weekly chart, so I'm giving you kind of a bird's eye view of IWM just because I think it's kind of important at this point. We had the COVID low, came up, consolidated for a brief period of time, like 3 months, and then we ripped on this move from November of 20 to March of 20. And this is another illustration of easier trading following hard trading. You're down in here, you're chopping around, boom, you're chopping around some more. But once you get that breakout, if you got in here at 165, that was an easy trade to hold. Just straight up, fast, no scary candles. Just that's a nice, easy trade. And so easy trading becomes hard trading, and it goes back and forth as stocks either stair step up or stair step down. And you can see that now we've been in a consolidation really since the beginning of 2021. And here we are 11 months later, just starting to peak above the top of the box. Now, if we were to go down on a daily or a 2-hour chart, you'll see that, oh yeah, we have broken out, and that's true. But just as a double or triple confirmation, you want to see this weekly breakout, and that's of course not going to close until Friday. So we want to get a closing candle above 232. And so that makes the reaction coming out of Jay Powell on Wednesday afternoon really important, because we could have a good day going, add to the breakout here, and then for some, Jay Powell says something, and then they reverse it and bring it back in to the range. Of course, then there is no breakout. It was a false breakout. So I think this is a really, really important week, but I want to show you the indicators because this is classic bull market. So we get overbought. We start coming down off of RSI. We reach a peak in momentum, and then the momentum starts coming out. But look at price. During this momentum bleed off, it's a correction in time. It's not a correction in price. As this flag or consolidation structure builds out, the price is not going down. So here we are at this point. We've come down and reset momentum just above the 0 line, and we're starting to move back up now. And so getting this bull cross right here, right now on the weekly is about as bullish a setup as you're ever going to get on the PPO indicator. When you get a reset near the 0 line and then it curls up to go higher, that's bullish all the way. And notice that on RSI, the same thing actually. As RSI comes down and the correction is happening in time, it never loses the 50. So it has stayed in the bullish regime really ever since the COVID breakout, ever since this COVID low. As soon as it started coming back up, RSI broke above 50, and then it took a month or two later, and then momentum crossed the zero line, giving you the super all clear that to be long. So very interesting, very exciting. And you guys know by now, when you break out of a consolidation range, the technical target becomes the width of the range. So if we're in a $23 wide consolidation and we break out from 232, that puts us at 255. So that would be my technical target on IWM if we get a closing candle above 232 on Friday. I would say, okay, we broke out, now we got to hold it, and our technical target is 255. Now I just wanted to show you, that was the weekly view. I'm going to skip the 2-hour view. It's just more granularity, but I wanted to show you the structure that's developed on IWM. By far the outperformer yesterday, up 2.6%, and the other indexes were not even 1%, if I remember correctly. So we got a gap up, and then it just kept on going. This is yesterday, and closed in this bull flag structure. So, remaining with the thinking and being optimistic, this looks like a bull flag structure. And what I did was I dropped in the flagpole, and then I projected this flagpole to the flag. Bull flags fly at half staff. So if this is the halfway point in the move, this structure here, if we get a breakout above 234, would be 240. Okay? And remember, that would be within the context of an overall measured move off the weekly chart of 255. So this 240 would be an intermediate target, or you could say T1 on your charts. That's what we want to see. What we don't want to see is, I really wouldn't want to see 233 fail. Work in this flag and then drop down. Why? Because there's a void here. I didn't mark it, but there's no real technical support between 233 and 230. So it could come back for that classic breakout back test, then go. So that might be a scenario that plays out tomorrow after Jay Powell. There's, whatever he says, there's turbulence in the market, and, the knee-jerk reaction is, everybody sell everything. You could see this fail, come back here to 230, and then have all this support hold, and then re-ramp for the end of the year. And so if you were trying to manage an IWM position and, you were, let's say you were in it right here, like I'm in it, okay? I'm long IWM. So what I'm going to do is I'm going to have a level right here below 233 basically as my stop for my short-term IWM trade. And so if we lose that, I'm going to get out, assuming a back touch. Then I will wait until Powell clears tomorrow afternoon. I'll probably let the dust settle Wednesday. And then Thursday, I'm going to be, assuming there's some kind of pullback, I'm going to be looking to get long on duration at 230 and play for a move higher in towards the end of the year with a stop just below. Okay? If we drop down below 230, then maybe it comes down here. We've got open gap. We've got open gap. Then if we drop down below 230, this whole thing could be a false breakout, and then we're back in the soup again in the big trading range. So kind of an important point right here. Not only that we've broken out, but can we hold that breakout on any kind of a back test towards 230? Okay, let's run through FATMAAN really quick. Certainly want to welcome any new subscribers to the channel. We seem to get some every day or so. That's great. I hope you're gaining some insight on these levels and along with the commentary. So I really appreciate it. Hit the subscribe button, the alarm bell, and the like button. Let everybody else know that you're appreciating the content. And then, if you want to go the extra mile, jump over in the show notes. There's a place where you can, there's a link to the blog site where you can drop in your email and get all my content regardless of when I send it. I usually send out a few notes during the day. And so that way you'll be aware of any trade ideas or market thoughts that I might have during the day, and you won't have to hunt for them. So again, thanks for being here, and longtime listeners, thanks for the continued support. Okay, Facebook, downtrend, bottomed out, trying to make a recovery, ran into trouble here at 334-ish. Had a little half back down to the bottom of the gap and at technical support here at 328-ish. And so now I think you can be long against that level. Look for a move back higher and a breakout here and eventual gap fill. That's the base case. If things fall apart and it drops out below yesterday's close back in here, then you could be short against 328 and see if you don't get a gap fill of either this one or this one and this one. And that would just tell me that Facebook's got to do more consolidation before it makes its run at some point to fill this gap. So, but as it stands now, I think the setup is bullish, but it's got to hold. It's got to hold the gap support right down there. Apple more or less had a treading water day. You've got a beautiful line of high volume over price bars here, and you can see that it the other day it broke above, went up to the top of the range at 150, then came back 148.50. I think 148.50 is the real pivot for bulls and bears. The bull-bear pivot is at 148.50. If you dropped below that, I would say it's coming back to 147. As long as it can hold it and move higher, then there's an opportunity for a gap fill. And if you wanted to take the strategy of, hey, you know what? I'm not going to get ultra excited here in front of the FOMC, especially if this thing goes dormant, right? Just for the next day and a half. Or you could say, I'm going to hold my fire until we get a breakout above 150. And that should be a real go level for this stock, because it will have taken out this large volume over price resistance. And once you break above 150, notice the void over here. And that just tells you you've got some easier running room there. So on a break above 150, I would think there would be a real good opportunity to get up to 150, 250 here at the prior high, and then you'd be at the point of going for another breakout. Tesla remains on fire. I've moved up this pivot to 1170. I think you can stay long against 1170. And I mean, if you're involved, you're just hanging on for dear life, right? I mean, it's ripping. I would be rolling up strikes and stops as you go if you're actively trading it. If you've got a duration position, say into early next year, just hold it and move your stops up. Move your stops up. You've at this point, if you've been involved at any point along the way, you've simply got to get paid for it. And it's not yours until it's in the bank. So continue to roll your stops and your strikes up. And if you're in a longer term position, you've got to really actively manage your stops, because it's not going to do this forever. So there eventually will be either a consolidation or a pullback. So you want to take advantage of that and be ready for it and make sure you get paid. So that's been an awesome trade for you. Microsoft, big breakout. We had a high the other day. Yesterday was a little on the soggy side, had a couple of bearish candles, but then closed the day with a steady ramp back up towards 330. I think 330 is the easy pivot to identify here. If you break above 330, I would be long with a stop below. And if it lost this low from the other day at 326, then you got to look to the downside towards this 322.50 area, where this large volume over price bar is. That should be good support back here. Strong chart. Amazon. Moved sharply into the gap on Friday and then gave it all back yesterday, coming back here to this 3,300 area to back test these lows. You can see how important that 3,300 level is on this chart. Support, 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 resistance, 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 support, support. So that 3,300 is really, building up some muscle memory for price. When it drops below, it comes up to find it. When it breaks above, it comes back to find it. So I think you can be long against 3,300. And then your next point will be 3340, 3380, and then right on up with our well-defined levels. Google. This is just the daily chart. And I wanted to show you this for the simple reason that we broke out last week above 2,900, and then yesterday we closed back below 2,900. Why is that significant? Well, could be a false breakout, right? We went out of the range, and then 2,900 from a technical standpoint, should have held, because that point then becomes support, and now we dropped below. So if I were actively trading this, I say, okay, price has got to prove it now. Re-engage on a break above 2,900, and that would be your long entry at this point. And if you sense weakness, then you could be short against 2,900 as well, because just from a technical standpoint, you break out of the box, you move back into the box, your target becomes the far side. So if I were to just look at this chart, not knowing anything, and just purely looking at technicals, I'd say your target is back here at 2,700. Now, I'm not going to do that for the simple reason is for being that the market is bullish overall. Google has been a very bullish stock. I would rather put my bet on 2,900 being recovered and looking for a long entry than thinking everything's going to fall apart and we're going to lose $200 over the next couple of weeks or whatever. So I would still be leaning bullish, but with that cautionary thing, it's got to get back above 2,900 to give you a fresh buy signal. Netflix. We had talked about this scenario yesterday. Here's your breakout, and although it didn't quite get back, fell about maybe $5 shy, gave you the back test. So that's nice technical action. Breakout, back test, get long, and go higher. So I think you can be long against 675, and I would anticipate a next leg higher. And then SMH, we broke out yesterday from this big level. Show you the daily. So we're popping out to all-time highs. This was the prior all-time high. So above 276, you can most definitely be long. And just as a reminder, if you're new to the channel or haven't taken notice lately, we've got a giant measured move laying out there at like 295. And that comes from the big trading range off of the daily chart. So we're, as far as the technicals go, there's $20 left in this trade as long as it stays above 276. So let's wrap it up there. Hope you guys are having some productive trading. Let's just take a short second to do a quick recap. We're in a bullish seasonal period from November through December. There's 42 trading days left. There's $160 billion of buybacks that got to get done by the end of the year. That's roughly $4 billion a day, constant bid in the market. I think if there's turbulence, it'll be contained. I think Jay Powell has gotten much smarter in his market communications. I don't think there's going to be a massive curveball tomorrow that's just going to pull the rug out of the whole market. I think he's going to have calming words. But that said, you got to be ready for anything on FOMC. So I'm not gonna go out there today and just max out my portfolio because we got some buybacks and November's strong. I'm gonna let Powell clear, make sure there's no disaster, and then look to add risk through the end of the year. But all things being equal, I'm looking forward to a higher prices towards the end of the year. So let's leave it at that. Hope you have a good day of trading. This has been Chris Buss with Traders Profit Compass. Talk to you next time.